Okay, I mean, before I start on my presentation, which is basically how we move from compliance to competitive advantage, I guess that it's very important really to set a context what banks is doing on day-to-day, because there's always a perception when it comes to a bank that we have a special capital, a magic wand, basically we can solve everything, be it national issues or national challenges. Because in short, yes, one hand we are extending financing or rather capital to our customers, but at the same time, we are very, in a sense, we carry a certain duty really to our customers. Because when we're lending out our cash, where do we source all the cash? It's technically coming from our depositors. So when we lend out RM1, definitely we need to bring back RM1. If we're not able to do so, basically with them, we cannot pay back our depositors. So what we are really doing at a bank, so we take RM1 from our depositors, i.e. our customers, we lend out to our customers. Imagine, let's say, for example, let's just give this particular project a financing. Let's not worry whether we're going to back our principal back, then we're going to be really in a big trouble. And similarly, I mean, there was a conversation, I think, when it comes to all these ESG loans or ESG financing, I think there's certain expectation, I mean, for bank to extend basically what I call a cheaper financing or a cheaper loan against, I mean, if our return is low, so when we need to pay our depositors, the return going to be low as well. So in the areas of banking, again, like what I said, there's no really what I call real philanthropic capital, meaning whatever that's given to us, then we can just invest the money without due regards. But of course, from time to time, we do have a small portion of philanthropic capital, i.e. in the form of zakat, of which would address us to help from the S of the ESG part of things. From time to time, I think Bank Negara would come in and provide a specific fund, or rather what I call a cheap fund, of which we would be able to extend what I call a soft loan or soft financing to our customers. So I think that's basically the context setting in terms of the role of a bank. So I was given a topic today, i.e. really to talk about compliance to competitive advantage. Again, I think this is basically something I could share from the context of CIMB, how we first actually adopted ESG in our banking. Sorry. Okay, but before I jump really to my own slides or presentation, so we at CIMB, when we talk about compliance, again, from the context of ESG, it doesn't really start even 7 or 8 years ago. Compliance only came in probably 3 or 4 years ago. In the context of banking, our regulators are technically Securities Commission and of course Bank Negara Malaysia. When we started, it's all about having that so-called conviction, and then you move to compliance, and then later on how you can actually make it what I call a competitive advantage. Actually, one of the things of which I wanted to share with you guys, how we really started, but of course, if you were to look at the context of CIMB, if we were to go back to 2018, we had our first round of what I call stakeholder engagement, and how this idea actually came out is really coming from our Islamic banking division within CIMB Group. And again, at that point of time, I wasn't really part of the Islamic banking division. I was more on the core of the capitalism of a bank, where basically we do set what I call the interest rate really for the whole bank. So again, it's always what I call a new conversation really for the bank, because in our day-to-day life, I think it's all about generating profit, but of course, I think they started basically a move out there in terms of having all this impact investment. So I mean, if you notice, really from 2018 to 2024, in terms of the activities really we've seen within the bank. So we talk about stakeholder engagement, and then we established in 2019 our own group sustainability department. We put in place our own policy, and in 2020 we created a role called Group Chief Sustainability Officer. And I still remember, I think during this year, I think there's still internal struggle on how deep we want to do this as well. There's always a conversation, people were saying, are we really want to go red just to go green? Because at that point of time, there's always a conversation. If we were to give out what I call a green loan, I think there's certain expectation, the interest rate or the cost has to be low. But then again, now back to the question, I mean, who's going to give that so-called discount? Because when we pay to our clients, our depositors, I think they still expect a return on it. So this is the part of which what I call the change management has to be there. And I would imagine that when it comes to the SMEs, the conversation will be a lot more difficult as well. And again, so the 2021, I think this is the part where I would think there's really what I call a pivot really within CIMB. Our first commitment at that point of time, we wanted to mobilize about 30 billion by 2024. But of course, once you have that so-called conviction, and let's not talk about compliance yet, I think as of end of last year, in reality, what we have mobilized up till last year was about 170 billion. Because at that point in time, I still remember when we set the target of 30 billion, because we are technically from the front office side, the business side, we're not sure whether we can hit that 30 billion. But even before we hitting 117 billion, I think we have revised our target a couple of times. So back in 2022, yes, I mean, let's bump up the number to 60 billion. And right after that, in 2023, given where we are, we revised the target to 100 billion. But in reality, what we have delivered to date is about 117 billion. Of course, to address the question from the gentleman earlier, do we fund the oil and gas sector? Short answer is yes, but it is selective. So, got to be careful because I realize I think there's probably a gentleman from Petronas as well. And sometimes when we deal with the oil and gas sector, there's always a question, right? If you were to look at the National Energy Transition Roadmap, yes, by 2050, we want to have more renewable energy really within our country. But then again, if you were to look at the path, which is very important to us as well, we will stay away from coal, again. But if you look at the so-called the transition, I think there will be a period of time where we need to rely more on gas. So in the context of CIMB, of course, it's not really a straightforward conversation, but of course on the outside, I think looks everything is structured. But internally, we have our own deliberation, I mean, even with our group sustainability division as well. So when it comes to exploration, for gas, we can still fund your business. For some of the international bank, they may not be able to touch that kind of exposure. In the context of CIMB, because we are not only adopting, but we are also adapting really to the local requirements. So we can still fund exploration when it comes to gas sector. And yes, you are right. When it comes to our National Energy Transition Roadmap, easily between now until 2050, the total funding required is about 1.2, 1.3 trillion. And not everything is profitable. Those they are profitable. I mean, let's be real. I think bank will come in and focus, I think, on those projects first. I think what is more important is really how to mobilize the capital, not only from the bank side, but of course, really from the investment side of things, of which I'll be able to cover later on, in terms of our own journey, how basically we changing ourselves to be the leader when it comes to ESG. So, I mean, it's also very important how to measure ourselves, because I think when we started, how do we know basically we're doing better than the other banks? I mean, if you were to look, I mean, as of today, are we doing better? Is it the yellow bank doing better, or is it the blue bank? But at least what we have adopted is basically the S&P Global Corporate Sustainability Assessment. So when we started, we are really at 90th percentile, but as of today, we are really at the 80th percentile as well. So of course, there's more than 100 data points. Again, what is more important to us is basically we are able to be more ESG-centric, but at the same time, we are profitable as well. So just to put in context really to the topic of which we discussed earlier, right? From compliance to competitive advantage. So from compliance side of things, BNM, I mean, has issued their own policies and guidelines as well. By the year 2026, there has to be minimum 50% of our new financing has to be related to climate. So I think that's something that we got to do. compliance meaning no choice, right? So there's no discussion whether is it a carrot or stick, because technically it's already a stick by now. When it comes to what we want to continue going forward is really to make sure how we can make this thing sustainable. So let's take a look in terms of what is there really for the businesses, why they should adopt ESG. And similarly, I would try to narrate in terms of how we push Islamic banking or Islamic finance even within CIMB as well. So let's look at the corporate clients. So as of today, I'll just share with you of the listed company on Bursa Malaysia, more than 80% is what I call a Sharia compliant stock. Do we know why? What is the reason why people wanted to do that? The answer is quite simple. Once you are a Sharia compliant listed company, your shareholders, your investors can not only coming from the conventional investor, but of course it will come from Islamic investors as well. So a bigger investor base is be better for your share price. And similarly, for corporates, that's why I think for some of the big corporates, they wanted to be part of the FTSE for Good listing on Bursa Malaysia, because they would open themselves not only to the traditional investors, but of course from the impact investors as well. So I think that's where we are in terms of the motivation behind it. And similarly, I think when it comes to CIMB Group adopting Islamic first strategy, it goes back to that particular mantra. It's nothing about basically you go and show Quran or Hadith, that's why we wanted to do Islamic finance. It always goes back to dollar and cents, because at the end of the day, we are still what I call a corporate entity. We do have a fiduciary duty to our shareholders to deliver the so-called the required return. And this is one of the things of which I wanted to cover specifically in the context of how we've been doing things as well, right? There's a lot of similarity between Islamic finance and of course, sustainability, because sustainability is the new kid on the block. When we roll out Islamic finance in the past, people always ask the question, especially for customers. I remember talking to a client from Singapore, fine, you want me to do Islamic financing, but what is there for me? Is it cheaper cost of fund? That has always been the so-called question. Of course, in short, the answer is all about basically trying to diversify your source of funding, so that one is one. And secondly is basically in terms of really doing good. So when it comes to Islamic finance, even before the Paris Agreement, I think back in December 2025, I think they signed it in 2016. So when it comes to ESG product, CIMB Islamic, it started back in 2008. You take a look at EcoSaveI product, that's something that we launched in 2008, even before ESG became a buzzword. So the product in itself, basically, for every dollar that you put with the bank, or every ringgit that you put with the bank, we set aside 20 basis points for our sustainability activities. So it has been used to fund our research on the Ulu Muda in Kedah in terms of the water catchment areas. I think we have funded Taman Tugu here right in the middle of KL. We have funded, I think, Babagon water reserve area, not that far from Kota Kinabalu as well. So again, that's why I think there's a lot of similarities between the Islamic finance and definitely ESG, of which I'll cover that part later on. So moving to the second segment of the clients of which we are servicing, for SMEs. Let's put it this way, for SMEs, the pressure has always been coming from their main client, right? From the MNCs, from the corporates, I think there's a certain level of expectation for them to be quite sustainable. But can you imagine someone that, say for example, producing tofu, or even producing nasi lemak, sometimes they're not even able to tell you for certain how many spoons of salt or sugar they put in their production, and then you're expecting them really to measure how much of carbon that they are basically emitting as part of their so-called business. So that's why I think in this part of the business, I think there will be a lot more facilitation of which really required for these particular clients, of which I'll cover that part later on. And last but not least is when it comes to the individual, there are certain push really coming from the government in terms of affordable housing. I think that one is really quite clear cut. But what is more important is basically how we can encourage their behavior in terms of basically purchasing properties where they would go for all these green properties. And of course, to a certain extent, basically in terms of acquiring their cars, whether they would want to buy what I call an EV cars. So I'll cover that part later on. So this is basically the comparison of which I mentioned earlier. So ESG is relatively new to Islamic finance. So when it comes to Islamic finance, I think one of the key components of the process, which is on the screening part. So we do have what I call a negative list. When it comes to Islamic finance, there are certain sectors or businesses of which we cannot finance. And as of today, when it comes to ESG, I think they are applying the same process as well. And these are basically something of which ESG has learned a bit, I think, from the context of how we've been running the Islamic Bank of the group. And this is also very important going forward as well. And we do realize, I think it's all not about managing the risk as well. I know there were some names that were thrown earlier. Of course, I can't really talk about those names, I think, because those could be what I call private information. But what is more important when it comes to the screening is not really about basically what you can see on papers. And sometimes you would realize, I think for some of those cases, I think it's all about managing the perception as well. I can tell you, for a bank, for us to give financing, we want everything in black and white. Even for parental support, right? For the PSA, sometimes we probably ask them to even be asking our relationship manager to record the phone conversation, meaning you have had that sort of conversation. So when it comes to ESG screening, I think to a certain extent, having it documented is also very important. But from time to time, I think there's a certain level of basically call that really need to be made really by a bank. So I think these are one of the things of which we really need to look into carefully as well. So let's talk about in terms of competitive advantages of ESG practices. So can I just check how many of you guys, say for example, has installed solar panel on your houses? All right, that's good. Whoever that came in earlier, probably they haven't come up with the leasing proposition, meaning you put your money upfront, and probably it's quite common for bank to offer that EPP scheme, meaning you use your own credit card to pay for it, then you pay staggered over time. And again, I think there's always a bit of question when you install, let's say, for example, 5 kilowatt, there's always a question, are you really going to get 5 kilowatt or not? But as of today, we all know for a fact, in terms of the cost of solar panel has been coming down. And of course, I think the NEM, I think they reopen it again as well. So that is the same, basically, conversation that we are having with our clients. Does the technology works? Does the number really works? Because for some of the corporate clients, when they wanted to install a high-scale solar panel, they always wonder, are they going to get back their ROI, or this one is just another story of which bank is trying to come out so that they would basically lend money to them and make money out of it. So these are one of the kind of conversation that we are having across our clients. So just to go back in terms of my point earlier, being sustainable is good really for you to access to capital markets. So that one is given. And sometimes really for the SMEs, it's also good for you really to access certain clients. Let's put the corporate clients aside. So that one is really clear cut. And when it comes to CIMB, because I remember I think we hosted Johor Sustainability Conversation last year with the Johor State Government. And from that on, I just realized for CIMB, we have a very detailed sustainability policy. Apparently, when you're hosting an event like this, no water bottles is kind of straightforward. So we just realized we wanted to give a small tokens to all the attendees. And then we just realized that token got a bit of plastics. Then apparently, we got to go and tell our vendors, oh, you got to change this thing because we are not allowed because of our internal policy. And I can tell you the new token, just on the packaging part, actually costs way higher than the one with the plastic. So when we need to pay more, what it means really for the SMEs, they're going to earn more, right? So there's always benefit of being sustainable. So again, it's not only true for the corporates, and it's also true for the SMEs as well. So on the second part, access to consumer markets and global supply chains. I do see it in our group credit committee, and being part of the credit committee, we need to know anything about all the different industry in Malaysia. So apparently when it comes to the CPOs, things that you're selling to the European market, things that you're selling to the Chinese market is priced differently, even for the same items. What really differentiates the prices is really in terms of the so-called certification. If you have RSPO, it's different prices. MSPO is really different prices. And again, when it comes to basically exporting to the market where they put a premium on your product, that's where basically what it means is that it's going to be a higher revenue for you. So I won't really deep dive on that. And of course, being sustainable would enable you to really tap to other markets. And more importantly, I think we all know, at least when it comes to the Malaysian market, even we as a bank, we do know, I think it is really what I call a saturated market. So personal household debt as of today is more than 90%. How much more you can lend to your retail customers? We know market out there is growing. In Europe, I think there's a movement for them to be a bit more sustainable. And I guess for the SMEs, for you to grow your revenue, there's no other choice. It's really to go out of Malaysia and grow your business. And again, I think in the past, we will be able to dump our product, say to our neighbors, but I think it is time really to move up really the value chain. So that is definitely something we need to look into. And I do see that opportunity happening now because of the Trump tariff 1.0. Some of the countries within this part of the world, they stand to benefit at that point of time. Vietnam, I think, grew quite significantly. I think we also happen to benefit from Trump 1.0. And the Trump 2.0, really the real benefit is basically for us to be upping our standards really to the EU level. And based on that, I think we will be able not only to export our products to the European market, but to a certain extent really to the American market as well. So my second point is that in terms of the attainment of requirements when it comes to credentials and of course the stakeholder alignment across geographies. So I cannot express this point further because you've seen a lot of demands towards renewable energy. You have seen a lot of MNCs out of Singapore. They have a specific demands towards renewable energy. If you were to read the news, there was an attempt to really pull a cable from Australia all the way to Singapore just for them to sell the renewable energy. Imagine, I think, the amount of capex that will need to go into it as well. And of course, I think in the past, there was also a conversation. Should we export our renewable energy to Singapore? Because I think we have a vast land. We can put in place all the solar farms. And again, the demand for renewable energy is definitely there, especially coming from MNC. So now the question is that how we will be able really to monetize it and really keep it within Malaysia. But of course, I think for SMEs, for the export market, like what I said earlier, in terms of the regulatory compliance for the MNCs, sometimes it could be quite tight. I think there's definitely opportunity there. Market entry and licensing, again, I think we shared here in terms of story about Tesla, but what is more important is basically for us to understand the market that we are facing and what are the things of which we will be able to do. And I cannot express this further in terms of how ESG performance will be able to drive profitability. So in the past, for me to push certain financing to customers, I wouldn't name the clients, but there's always a concern whether can you really generate profit from being more sustainable. I think let's pick, say for example, energy and efficiency fitment. So I think there is a client where basically they have a proposition, they will come in and provide all this facility maintenance and management. So let's say on a monthly basis, the client is paying 1 million for waters, electricity, and really for the upkeep of the building. There will be someone that will be willing to come in and ask you, instead of paying 1 million, why don't you pay me 800,000, but you sign a contract with me for the next 20 years where I would maintain everything. So This particular company would basically put their own money, capex, in terms of changing all the light bulbs from LEDs and using AI in terms of basically doing all the upkeep of the building. And again, I think this is something that has been tested. And even for the large-scale solar farm, at least I think now probably there could be 5 to 6 cases where it has been fully repaid as well. So yes, being sustainable can really drive profitability, and we have seen it, I think, many cases already, really within the industry itself. And last but not least, in terms of turning EU carbon border adjustment, so it's supposed, technically it's already live. I think next year is really, basically they will go fully live. And this is the part of which it was mentioned earlier when we talk about carbon border adjustment mechanism. Sometimes it's better for you to do it yourself instead of paying a tax, in this case, really to a foreign government. And the reason why they are doing this, of course, there's always the conversation, people more or less using this is basically as part of the trade wars. But of course, the justification that was given is basically to give a level playing field to all the companies operating within the so-called EU region. And to be fair, we may not agree sometimes from time to time what we've heard really from the market, because I remember when I was in Switzerland, I mean, when you look at some of the products, they even put it there, basically this product is free from palm oil components. I mean, that's something I couldn't really understand because we know for a fact when it comes to CPO is way more productive than soybean and other form of oil. But I think that is the situation that we are facing out there. And again, it goes back really to the so-called supply chains preferences as well. And again, I think this is basically things that SMEs and even corporate to a certain extent could consider when it comes to basically tweaking their own process. Okay, my point here today is not really to show or promote our product, just to share with you in terms of what we are doing in the market. Sometimes it can be quite confusing, right? What is the difference between sustainability-linked loan versus sustainable loan? So sustainable loan, what it means is that the use of the proceeds that you raise from that loan or financing is used directly in the so-called project. So sustainability-linked loan, what it means is that, at least in the context of CIMB, on the bottom right, I think we have what I call SPT, i.e. the Sustainability Performance Target. I'll share with you how we actually carry out that so-called product. So in short, I think there are many ways to raise funding. It could be via a typical bank loan or bank financing. Like Synergy, I think they have raised Suku, which is a form of a capital market instrument. And of course, when it comes to basically sustainable finance offering, we do realize there are certain clients, they could never be green. So that's why we have what we call all this transition finance bond or Sukuk. So when it comes to the sustainability linked loan and financing, this is basically resonates quite close to me. I remember negotiating with one of the international banks, because we as a bank, sometimes we do need financing from another banks as well, especially dollar financing. I recall just to agree on 2 or 3 SPTs, it literally took us months on what should be the target and what kind of measurement that we should rely on, and just even selecting the measurement itself. So again, of course, I think we've done this thing, I think for a few years, the process will be a bit more seamless. I think for today, probably will take about 1 month really to negotiate. And the only thing that you will need to do, at the very least, since cost is also very important, versus the other bank that was mentioned earlier, you don't need to appoint a consultant. So you save money on the consultant. You just got to pay on the insurance part. Basically, third party, just to make sure the measurement is fair. And if you were to receive a rebate, it's really, you are really deserving it. Okay, so I won't dive, I think, in terms of sustainability links, effects and derivative. I think it's just a hedging instrument. Normally we would give out together with the bond or financing that we're giving to our clients. Okay, All right, okay. So when we talk about our sustainable financing, I think there are a few things of which we would really look into it carefully. One is in terms of the use of proceeds. So I think these are one of the things of which we discuss carefully within the bank. We heard about the so-called the greenwashing. Some of the banks are being fined. So as of today, we are going more towards sustainable loan versus sustainable link financing because of that. So the use of proceeds is definitely very important. Again, there was a question earlier. Does green loan price lower than a normal conventional loan? For capital market, to a certain extent, there was a conversation about the greenium or the green premium. Again, I think it goes back to the fundamentals when basically there are more, okay, 5 more minutes. There are more investors out there, technically your price could be a lot tighter. So that one is quite clear cut. In terms of project selection, I won't deep dive into that. The point is that, the project has to be profitable for a bank to come in. If it's not profitable, it's not only the bank, I think any other form of reasonable investors definitely won't come in as well. And of course, in terms of proceed management and reporting is definitely very important. I won't go into that. I think it's been covered extensively later, earlier, and probably I think in the next section as well. Okay, I need to give a quick one. When it comes to sustainability linked financing, additionality is also very important. We have had conversation with the clients. They already install a solar panel on top of their factory, and they wanted to use that SPT, that one as their SPT. That's something that we can't do. There has to be additionality, something new that you got to do. And that's probably one of the key components when it comes to the sustainable link financing. Okay, just jumping quickly when it comes to SMEs. So when it comes to SMEs, I can tell you there's a lot more. I wouldn't call it free money, but I would say it's cheap money. So I do have Rahmat here, I think from commercial banking. They are running what I call this high-tech and grain facility. So we receive cheap fund from Bank Negara. So we roll out a program. I think we are one of the biggest players. I guess today, I think we have disbursed close to 800 million. And this is something that we will be able to amplify further. Again, for the SMEs, if you're not sure what you've got to do, just speak to one of our RM. So it's quite simple because there's always a concern when it comes to SMEs. Yes, I want to be sustainable, but I'm not sure what I got to do. Let me go through this particular one page. Okay, with that, I'll just conclude my presentation. Again, with me, I do have KC here. So KC previously, he was basically with My Creative Ventures. He used to finance movies and creative industry. So you can always talk to him. And of course, I do have Rahmat basically being our Business Development Officer for Commercial Banking. So with that, I'll say thank you. Thank you so much. Happy to get any questions from you guys.